Good morning, guys. Welcome to the market report for today, Wednesday, July 11th, 2018. Let's get everything started. We got a number of issues we want to talk about in the world, developing stories, as well as the quick market report. So let's get started. Let's open the charts right here. The first thing we want to talk about is the silver price. Silver is down really low, $15.89 this morning. Now here's the thing about this, what I wanted to mention, is if we take a look at the silver price, let's also take a look at gold today. Gold is $1,250. It's down on the ropes too. It's down to $4.50. Now let's take a look real quick at cryptocurrency. Bitcoin, right? We're down to $6,366. So cryptocurrency is down too. Of course, all the other cryptocurrencies follow Bitcoin. This is the big one is Bitcoin. All the rest, the closest is Ethereum next to Bitcoin, but they're all down. When Bitcoin goes down, all the others go down too. So there, we've covered gold, we've covered silver, we've covered all Bitcoin, and we've covered all the other cryptocurrencies, all down. Everything's down today. What you're looking at is down is all of the alternatives to the U.S. dollar. Any alternative. You want to get out of the U.S. dollar and you want to get into something else that is going to give you a value that you can store your money someplace other than the banking system. In dollars. You don't want your dollars in the bank anymore. You want to store them someplace outside the banking system. Well, it's all down today. It's all down. It's all down big. But what about the dollar? Where is the dollar today? Well, the dollar, she's been riding high. Here's the dollar. She's been riding high. She's up at 94.11. And she's been staying high for a long time now, the U.S. dollar. This trend, is going to continue until the whole thing breaks. And what this trend would point to you is that it's better to be invested in dollars, and the people that are in dollars are like, ha, we're winning, win, written all over us. And the people who are invested in gold and in silver and Bitcoin and Litecoin and then all the other cryptocurrencies and divested themselves of dollars and thought this was a good thing to do, they're like, sad-faced, because they're seemingly, right now, they're seemingly losing. Well, this trend is going to tend to continue as long as we're heading toward deflation. This deflationary thing. But the problem is if you're thinking to yourself, hey, I'll wait this trend out a little bit longer and I'll try to hop in and grab my Bitcoin and my Litecoin and my gold and my silver when they reach a bottom during the middle of this deflation. Well, what's going to happen is you're going to find that you're not able to get any of the physical parts of these assets. What I mean by that is physical gold and physical silver at a certain point, a snap is going to occur. It's going to happen so fast, and these rich guys are waiting for this to happen. They're going to snatch it all up ahead of you. They're going to snatch it all up in a fraction of a second because they have the capability to buy it all at the push of a button. So they're going to wait until the price hits the rock bottom, the bottom of the bottom of the bottom of the barrel, and their plan is to buy it all up in one fraction of a second using their computer algorithms, their bots, to buy it all, right? And then once it's all bought, physical delivery of that product, of gold, the silver, that can take place the next day with a Brinks truck, because they've purchased it all. At that point, it's been sold. Then the actual physical delivery, you're not going to get any. You go into your coin store and you'll say, well, you still got some coins there, some silver eagles, sell them to me. And the guy says, well, I'm afraid we can't. So-and-so has already purchased them. Some other guy has already purchased them, some rich guy. and he purchased them online using the computer bot or whatever to hit the bottom price. And they'll be they'll be loading them in bags and bags of them, loading them in from your coin store into the back of a Brinks truck the next day, and they'll be hauling them out. And that's if you'll actually what'll really probably happen is you'll probably go to your local coin store to buy some silver, and the door will be shut and locked, and the guy inside the local coin store, if he had any coins left at all, he's reserved them for himself. It's all going to disappear just that quick. And as far as the cryptocurrency is concerned, you can actually have a cryptocurrency shortage. Even though it's a commodity that's sold as over the internet as because there is a physical limitation to how many bitcoins there are out there, and you can quite literally have a shortage of physical bitcoins, because there's a difference between the physical bitcoins and exchange created products that are related, like exchange funds that are always an underlying they're always related to the underlying asset. What I'm trying to say is like the same thing with stocks and bonds and these exchange traded funds and so on that extend out from the underlying asset. Basically, what they're selling is it's like selling Brooklyn Bridge. It's like selling the London Bridge, the old thing where the guy used to go out and sell you London Bridge. He'd take you out and he would say, "Oh, look at my lovely bridge. You want to buy it?" And you'd buy it, but he wasn't the real owner. And this is the way whenever they're selling. This is counterparty risk. It runs all the way through the system everywhere. It's rooted into the system, and what's going to happen is all of these things, if you don't hold it in your hand when this whole thing shuts down, and what's going to shut it down, the key marker to shut the whole system down, believe it or not, the key cornerstone that's holding the whole thing up, and when you pull that cornerstone out, the whole system's going to collapse. And it's almost hard to believe what that key cornerstone is. That key cornerstone is actually silver. The whole system's going to collapse at a certain point, and what's going to take it down, I believe personally, is going to be silver. It is the Achilles heel of the financial system, because silver's connected to gold. Gold's a much bigger market than silver, but when we have a silver shortage, a physical silver shortage, a failure to deliver in the silver markets, and because it's such a tight market, it's extreme tight market, these companies out there, companies like the iPhone companies that make these phones, they have to have their silver. They cannot continue to keep their production line going. So even at the hint of a shortage in the 1,000-ounce bars, because that's what they use, 1,000-ounce bars of silver, even at a hint of a shortage, they're going to run out and they're going to buy massive voluminous quantities. This is going to exacerbate the shortage. And this whole thing is heading toward this. When this day comes, when silver goes up like that, so will the gold market. And the gold market's trillions of dollars. And these markets are going to just suddenly snap everything else around it. And it's a deflationary thing that's coming. The whole thing is, the deflationary part's probably going to trigger the shortages. And why that happens is the deflation will just keep pushing the price down on these commodities. So you've got certain sectors within the economy that has nominal price inflation. And then you have other sectors within the economy that's experiencing deflation simultaneously. So what happens is, just basically, in a layman's terms, to explain this effect, is it creates a bargain on one particular thing. And this is what it's creating for gold and silver. It's creating a bargain where you have certain other things in the economy, like chicken prices or like meat prices going through the roof, and silver prices falling. If this effect continues, this strange effect, I mean, it's just like something bizarre, the fact that silver prices are falling and gold prices are falling while something like the price of meat is going through the roof. Well, if one thing's going up and the other thing's going down, it's like two cars on the freeway. When you got a car coming toward you and your car's going this way toward them, and each car's traveling at 50 miles an hour, there's a doubling effect there. The 50 miles an hour plus 50 miles an hour makes 100 miles an hour when the two are coming like this. So if you got meat prices falling and silver prices, silver prices falling and meat prices going up, it's that same doubling effect of separating the prices. And so what happens is in the end, if that were to continue, well, a piece of hamburger would cost more than a piece of silver, weight for weight, pound for pound, if that effect were to continue too much longer. So it becomes obvious in the end, at a certain point, mentality gets like silver's the cheapest thing out there. Companies will quite literally start to use silver plating on their like automobile manufacturers might start to plate their door handles on their cars with silver, because they'll say to themselves, hey, you know what, it's cheaper than using chrome. We can actually they might come up to a bright idea and say, hey, you know what, we can have silver door handles, we can put a thick heavy chrome silver plating on our door handles for our cars. And there comes all of a sudden, because the price gets so cheap, say the price of silver in this deflation moves down to $14, $13, $12, you know. In fact, these rich guys are waiting for their $10 silver. They're going to scoop it all up. That's their plan. They're going to scoop up all the physical that's left in one night. And they're all sitting in there buddy-buddy together, shaking hands on this like a pact. I'll get to my 100 million ounces. What about you, Jim? I'll get 100 million too. And we're all waiting. They're all sitting there waiting in the wings. They're all going to scoop up all that's left in the whole world in one night. They're all buddy-buddy. They've all probably made this plan behind a table, and they're all buddies, and they all go to the same lodge, and they all share the same cup and everything else, and they're all buddies, and they're all gonna scoop up all the silver that's left in one night while you guys are asleep. And so you're going to go into your coin store, and there's going to be none left for you guys. And I mean, this is what's going to happen. And so if you got nothing, if you don't have even 1 ounce of silver, and you're sitting there and you're thinking, hey, you know what, I'm going to get in where these rich guys get in. Well, you got another thing coming, because they're going to scoop it all up one night. You're going to see the price go lower and lower, and you're going to be sitting there waiting for you're going to buy your $20,000 worth of silver. Oh, if it just gets down, you're going to be sitting there waiting at $11, and you're going to be saying, hey, you know what, it gets to 10, I'm going to buy it. And you're going to wake up when it hit $10.43. They all scooped it up while you were asleep. This is the way it's going toward this. Seriously. Now let's take a look at the Dow Jones Industrial Average. Down 140 points on the day, you know. There you go. Down 140 points. She peaked. I figured she'd peak before she hit. Now, yesterday I was talking about 25,700. It meets resistance, I said. Well, she's snapped off and she's heading back down again. But she's well within this boundary here between 23,000 and 27,000. I mean 25,700. She's well between these boundaries. In fact, she's right in the middle between them. And this is where I said it. This is the range it's been going through for the longest time now. They can blame it on whatever they say the market's moving on. They can say, oh, it's reacting to the trade wars. Well, yesterday it reacted to the trade wars by going up. Today it's reacting to the... So I'm being sarcastic about what they say, you know. I don't believe that the market's reacting to any of these things. It's more reacting to the bond market. The reason why the market is staying in this range is the bond market is staying in a certain range. Now let's take a look at oil. $73.27. She's down a little bit on the day. And this, the reason why this is because Saudi Arabia just increased production. Successfully increased production by 400,000 barrels a day. Saudi Arabia. And this is the reason why we got this little dip right here of down 84 cents. Now let's take a look at cryptocurrency market capitalizations. And of course, what you're going to actually see is Bitcoin goes down, they all go down. But we're looking at a Bitcoin dominance of 43.2%. Wow, that's riding high. 255 billion market capital. We're looking at the coins they're all down substantially. EOS is still down the biggest. Oh wow, EOS $7.20, probably a bargain right now. Litecoin is probably a pretty good little bargain too. But Litecoin is up 4% back up. It was like $76, but still anything under 80 bucks on a Litecoin is not bad at all. We're looking at Neo. Neo is a good bargain right now at a rock solid $34. And Neo is a nice little coin. Neo pays dividends. I've always liked Neo. It's just above Monero. It's Monero is a nice little coin too. Those are two nice little coins. And so is Dash. Dash is only 221 bucks right now. You know, that's a good price for Dash. I wonder if I should do some research on Dash and find out when they're going to release their new wallet, if they have released it yet, or when it's going to come out. It's called the Evolution Wallet. I got to do some research into that because it could really affect the price of Dash. Now we're going to take a look at bonds and rates. The bonds today, see, the yields have been actually falling. I'm not exactly sure what's causing yields to fall in this environment. They shouldn't be. They should be rising. But this is going to give the Fed impetus to think they're getting away with this shit. Excuse my French. But I don't think they're going to get away with it. But right now they're seemingly getting away with it. Yields are staying suppressed, they're staying low, while at the same time the Federal Reserve is doing their quantitative tightening, which should be raising yields through the ceiling, but it's not having that effect. And so because they're getting away with it, they can continue. In fact, they can increase their quantitative tightening, but up to $50 billion a month of draining liquidity out of the system. And they're seemingly getting away with it because the stock market's holding steady, you know. But this is going to have a deflationary effect. We could actually be seeing the first parts of the deflationary effect on the price movements of gold, silver, and the dollar. You know, we could be seeing the first stages of this deflationary effect that this is going to have. It's going to be a sudden when this deflationary effect hits. Now let's take a look at we take a look at the U.S. dollar index already. Let's talk about a couple other little things going on right here. You know, United States, they export crude oil, you know, and who is a significant importer of the United States crude oil? And I was a little bit shocked. I was reading today that Canada is the biggest importer of U.S. crude. I was kind of shocked by that. But the second biggest importer of U.S. crude is China. And you know what China said they're going to do as part of these tariffs? China says that they're not going to import any more U.S. Well, they didn't say that. They said they're going to put a 25% tariff on U.S. crude imports into China. This is what they're threatening to do, China is. Well, the net effect that that's going to have as the number 2 importer of U.S. crude is that it's not going to make U.S. crude competitive anymore, simply put. And they're not going to buy it if there's 25% import on it, because crude oil prices are so, what's the word I can use for it? The price is at such a stable level. If you put 25% on it, suddenly you've made it so nobody wants it, or whatever, you know. And so that's what'll happen, is they won't buy it. And so there goes the number 2 buyer of U.S. crude oil products. So Canada being the number 1 purchaser of U.S. crude oil products. Here's the thing, 900,000 barrels a day, and most of that's running into Canada, something like 600,000 barrels a day. Yeah, go right on ahead and put tariffs on the Canadian economy and destroy the Canadian economy, Donald Trump. Go right on ahead. And the Canadian economy suddenly will go into a massive slump, and there'll be about 300,000 barrels a day of U.S. crude that they're not going to be buying, basically. This is going to have a deflationary effect on crude prices. Increasing Saudi production is going to have a deflationary effect on crude prices. If crude prices fall off, you know, this is going to add to this deflation. See, we could suddenly snap into deflation overnight Let's take a look at something else here real quick. Kaliningrad. Kaliningrad, this little tiny country right in here. It's just look at the size of it. I mean, it's nothing. It's such a tiny little country, but it's strategically located. I believe they have a port in here, right in here. This port, and it's a port that leads out into. If we back the map up, it leads out into the ocean, into the Norwegian Sea. This port. I think Russia is very interested in ports. Now, see, Russia come over here not long ago, and they took this little country right here. Uh, this little country right here, they annexed it. It's called Crimea. They annexed it, and Crimea has a port that goes into the Black Sea. Now, over on the top side of Russia, here's Russia. Here's Moscow right here, by the way. Right here is Moscow. This is Moscow right here. If we back up from Moscow, again, there's Moscow, and we take a look at this little country right here, Kaliningrad right here, what we see is another port. There's another port in there. I should do a show about what's going on with Russia. I think Russia is getting ready to become a bear again, to tell you the truth. And I think that NATO is getting very, very worried about Russia at this point. Russia's building up their armaments. I think Russia wants to take back areas that they've lost during what was called the former Soviet Union. And I'm going to do a show about this later on. So stay tuned to that. So listen, thank you guys for listening. This has been your market report for today, and we will see you probably tomorrow. Bye-bye for now.